The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, on this wonderful Twitter day. I hope everybody is twitting okay. If you have any questions, it's 877-927-6648. This is the Commodity Show for TFNN, but I posted the early morning trading for Twitter into the TFNN Tiger TV Tiger Den, just to show the folks that Fibonacci is alive and well. In the first few minutes of trading, the market had a 1.27 expansion to the upside, and then it made a 1.27 expansion to the downside, which defined pretty much the whole trading range of the day. So that's interesting. Well, that's the interesting part. I wanted to start the show, the commodity show today, just a little bit different. I'm going to start with one of the big commodities, and that's the stock market using the Dow Jones Industrial Average. I posted this chart several times before, but it's a monthly chart going back into 1987, and it shows the low from 1987 to the low in 2009 was exactly 61% retracement, and now we've completed this 1, 2, 3, 4, 5 expanding triangle pattern, and I'll go into that in just a little bit here. Because this is a pretty critical day with all the bullish news that we've had, and the market's had a little bit of a reversal here. We want to be aware of this just in case, the market, does turn south from this area. We don't want to be left, holding the bag. The question that I pose to you is that if you believe in these numbers, you would have to be a buyer at 0.4 down there in March of 2009. Well, if that's the case, then you would logically, be a seller where we are now, because now you have three more things telling you that this market is making some type of a very, very large top. That's the way we look at it from a pattern recognition swing point of view. The second chart that I'm going to put in to Tiger TV, of course, is the cash S&P, and I want to do that on the monthly basis. And as you can see, again, we have the same type of 1, 2, 3, 4, 5 expanding triangle that is there, but inside of that we have a ABCD pattern from 2009 to 2011, and then 2011 to 2013, and it's symmetrically perfect. In other words, the time up in the AB is equal to the time up in the CD leg, and that's coming in right at this level in the S&P. Now, the interesting part about the S&P is that we made a double top in the futures by 1 point from 4 days ago. It was exactly 1 point from 1773 to 1774, and then we took out last week's low, the low of the last 3 days at 55. We went down to 1752. Now, if we go below 1743 today, that would be a weekly reversal in the S&P, and to have a weekly reversal when all of these patterns are, telling us that something really sinister is happening, and it's something we should really respect. So in the next few days here, if we go below 1743 in the S&P cash futures, the S&P cash, then I would assume that this thing that we've been talking about to the downside in stocks, is probably started. But until that happens, we have to just wait and see, because it's still very early in the day. We still have 4 hours of trading, and it's been very, very active. And these are ideal markets for the type of things that we do, as as far as the swing trading that we like to see happen. We've had some really wild moves in some things today. One of the things that we're going to talk about is the corn market, because we've been watching March corn here for a long time now, and we finally reached a level in March corn that is acceptable for an area of buying, and that is we've had a beautiful ABCD come in here in the corn, in the March corn at the 430 level, and that's about it. We've got our first caller today, John from Philadelphia. Are you there, John?
I am, Larry. Thanks for taking the call, sir.
My pleasure, my friend. What can I do for you?
Larry, I just wanted to thank you for your work sharing with us today and this past week on the S&P. I noted with great interest yesterday during your call between 12 and 1 how you were identifying your timing studies. And Larry, as you intimated, no one can say with any certainty there's no proof that the S&Ps have made any important high here. However, yesterday when you were going through those timing studies, I was observing the price pattern since Tuesday. That would have been October 29th. And it looked like there was a setback and potentially an emerging three drive to a top pattern on the 10-minute charts. And I just couldn't help but just laugh, chuckle, and be astounded when at 7:45, when the ECB came out with its rate cut news, that those E-minis spiked right up to that 1774 mark you talked about, and possibly completed a three drive to a top pattern. So I just wanted to tell you, those tools you've taught and these timing studies are just terrific, and you can set things up in advance just very nicely, and may not turn out to be big winners, but you can find lots of low-risk opportunities setting up all over the place.
Well, that's true, John. The key here is to not so much to worry about the big winners, but not to have any big losers. And that's what we're going to try to help the folks with, because if we go below 1743, folks, that's going to be a weekly reversal in the E-mini S&P, and that in itself would be something that would be very, very ominous. Don't you think, John?
Yeah, that would be the proof I'm looking for exactly, that 1743 takes out that 47 swing low. I think that was last Friday's low, the 1st of November, by 4 points. That sounds like a good margin to give yourself.
That's what I'm looking at too. I'll put that chart into Tiger TV so the folks can take a look at it, and then I'll also put in that three drive pattern that we were watching, and the fact that we took that high out by just 1 cent and then dropped 20 points is it takes a lot of selling to do that. And but the thing is, there has to be follow-through, because if the market turns around and makes a new high today, this could have been a significant low where the market might go up for another 5 or 6 weeks. You don't really know, but at least it's lined up pretty much like we expected it to.
Yeah, no, I can't agree with you more, making that observation that no proof whatsoever, and shoot, we've already bubbled up 10 points, 10 S&P points off the lows, so we'll just have to wait and see. Larry, I wanted to change subjects and ask you about those grains. You started off with the corn market. I had shared with you and folks in the den how the monthly chart in the corn market showed a massive trend line support area that dovetailed perfectly with the Fibonacci support mark down at that 425 mark. Now, we've gone to it, we've held. It's bounced a bit, but the corn market is of interest. But as I look at the other grains, what I wanted to draw your attention and ask you about is the bean market, both the January beans and, frankly, the December meal contracts. Both of those have bounced really strongly just in the past 30, 36 hours, and both of them made lows. The Jan beans around 1240 and the meal around 390. And Larry, if I'm looking at it right, we've got potentially important major declining patterns completed with maybe some good upside from here. Wanted to see what you're thinking.
Well, I'm glad you brought that up, John, because I'm going to finish covering corn here later in the show, and then we're going to move on to soybeans. But I see exactly the same thing, that it's hit some type of a major support. And, of course, corn being the bigger crop, when I see that leads more credence, because I know they're totally different products, but they're in the same class. And so it's really amazing. In fact, the whole world has been bearish these for so long. Just on a short covering basis, we could get a pretty substantial rally going in the market for corn and beans.
Indeed. And what I will just mention, just on the bean market compared to the corn, the supply-demand situation in soybeans globally is tighter than it is in corn. The corn crop in the U.S. this year in particular was particularly good. And from an import-export perspective, the bean market seems to be just a little bit tighter than the corn market. So my thinking is, if there's a rally to come, it might be more dynamic in the beans and the soy meal product. So I just wanted to share that. And before you kick me off, Larry, I wanted to ask you about the energies. I will tell you, I placed limit buy orders in heating oil this morning. I got filled. I'm just thinking, Larry, on the December heating oil down at 283, I see a beautiful Fib 1618 expansion mark coinciding with a Fib 786 support market coming right in at 283. I'm thinking, or at least speculating, that's a low-risk entry on the buy side. Wanted to see what you're thinking.
Well, I was watching that today in the crude oil because, being the main product of heating oil, I was watching crude oil, and it had some really strong support at $94 a barrel. I think that's a pretty good, indication that we could have a pretty good bounce from here. But these trends are down for so long, and and we're so oversold. We could get huge rallies in these things without any trouble at all. That's the way I see it.
Very good, very good.
Yeah.
Listen, thanks so much for all you do, Larry. We do appreciate it.
Well, listen, I appreciate what you do, and keep those private emails coming to me, my friend, because you got some wonderful trades in there that I enjoy looking at.
Very good. Thanks, Larry.
You bet. Thanks for calling in, John. Okay, folks, we got the Dow Jones up. Nope, it's down now. It's down 20. The S&P is down about 8. The NASDAQ is down 28. And Twitter is still in business and trading at around $45 a share. So I guess it's okay. I understand that it had its first downgrade already today. Somebody downgraded it from 45 to 30. I imagine that was someone that didn't get it bought at 27. That would just be my guess. So it's going to be quite interesting with that stock just to see what's happening with it. The emotionalism that we're having in the markets, folks, I've been mentioning that for several days here. The fact that this whole month of November is just filled with some really important things. We've got to take a little break. 877-927-6648.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. Larry Pesavento for TFNN's Commodity Hour. We've got a call from Ron from Denver, Colorado. Are you there, Ron?
Yes, Larry. Appreciate your time.
It's my pleasure. What can I do for you, my friend?
Well, I was looking at all the metals, the commodity metals, and they all are very, very weak this year, except for palladium. And palladium's down a little bit today, but it seems to be holding up there. And I just wondered, I own some Stillwater SWC, which is the only North American producer of platinum palladium. And I just wondered what your thoughts were on platinum and palladium.
Okay, I posted into Tiger TV a chart of SWC, and as you can see, we made a beautiful Gartley back on October the 14th down at the $10.40 level. We've rallied, up to 11.76. The stock is forming an incredible pennant, Ron, going way back to January of last year and July of last year. Both of those are the previous year, July of 12 in January of 2013. So whichever way it comes out of this pennant is what I would suggest you keep an eye on. In other words, you don't want this stock to go below $10.08 a share on the downside, and if you want to keep it, it needs to get above $12.10 on the upside. That would keep it, within the realm of coming out of that pennant, either positive or negative. That's the way I would do it, controlling risk. But remember, Ron, I don't know anything about the fundamentals of the company. All I'm looking at is a chart, but it's about as perfect as pennant as you could possibly ask for. The stock has really strong support at $10 a share. So I don't think there's any question about that. But you need it to stay above 10.08 in order to be bullish that stock.
Fantastic. fantastic. I appreciate your comment. One other question. You were talking yesterday about the solar storms, and that was something I really had never thought of or experienced before or anything like that. Is there a time in the past that there's been a solar storm that's affected the market?
Not so much the market, but there's been the last major solar storm was 1989. It hit Canada. It hit one of the provinces of Canada, and it knocked out electricity for 4 days. This one that's coming is supposed to be 3 or 4 times bigger than that one. I think the best way to do is to just Google it under NASA, because they have quite a few articles about it. It's supposed to hit sometime between the 15th and the 23rd of November, which coincides with some of these aspect dates that I'm looking at on my cycles. But a solar storm is certainly different. I don't know what would happen, but if it knocked out electricity, I mean that just knocks out our economy, because everything runs on the computers.
Absolutely, that caused a lot of fear.
Well, that's true. My friend Arch Crawford is so strong about it that he's recommending people buy extra water for the next few weeks, just in case that does happen, so that you have a supply of fresh drinking water if something really crazy happens. But Arch has a very poor record of causing Armageddon to come. But like the man said, a paranoid man only has to be right once in order to be right. So we'll see if that happens.
Very true. Okay. Well, thank you, sir. I appreciate it.
Thank you for calling in. I want to wish you happy holidays, too.
Well, same to you. Thank you, sir.
They sneak up on us too fast, I'm afraid. Okay, folks, we've got the Dow Jones still up. Well, it's down. I keep us up in the morning, down in the afternoon. It's down 25 right now. We've got the S&P down about 5, the NASDAQ down about 28. We've got gold down a little bit, $8 or $9. Hasn't done too much here. The currencies, the dollar has had a little bit of a rally, and because the euro has been under such great pressure. So we're going to keep an eye on soybeans when we get back from our break. And we also have to talk a little bit about the gold market, because gold is at one of the real critical levels that we've seen in a long time, down at this 1295 level, folks. It's got to hold this level without any stretch of anyone's imagination. It's going to be very, very important for it to do that, and with gusto. In other words, it just can't meander around this level. It's got to move away from the 1295 level pretty good. We did have a $20 rally off of that level, but in fact, we really need it to go a lot higher and very soon is what in order to still be bullish the gold market. Copper, even though it's I think it's up a little bit today, really still is in a really strong downtrend, and I don't see any reason to think that it's not going to keep going lower. Okay, we're going to take a little break here. The Dow down 24, the S&P up down 8, and the NASDAQ down 28.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV. With streaming live video, mobile connection, you can keep up with streaming live video. Then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, Larry Pesavento back for TFNN, and I posted into Tiger TV the hourly chart on gold that takes us back 3 or 4 weeks so you can see the major support and resistance levels that we've hit. And today's low was spot on, 61% retracement of that previous move. Our friend Mr. Z from Tiger TV was talking about it in the Tiger's Den today, giving people a heads up on it, and it stopped right on the money. And the key price to look at now is that 12.95 level in December gold, because it must hold above that. We're trading now at the 12.08 level, so it's holding up relatively well. Silver is doing very well on the day. It's only down 10 cents, which is a feat of master proportions, given the fact that there's so much selling going across the tape on some of these commodities. And that's all the emotionalism that we're having with the stock market, folks. I know you might think it has something to do with Twitter, but in fact it really doesn't. It's just one of those things that happens near a market top. If this is a top, that you get a lot of this emotionalism that's brought forth in the market and makes things, really, really crazy. And like I mentioned at the start of the show, folks, if this S&P goes below 1743, either today or tomorrow, either Thursday or Friday, that's going to be a weekly reversal, and you have to respect that. If you went back and looked at what happened in 2007 and used a weekly reversal to protect your positions, you would have been just fine. This market's been going up for a very long time. and it's due for a little breather, if nothing else. Maybe it's going to make a higher high later, and maybe this is a top. I'm not sure. All I know is this is the most ominous-looking charts I've ever seen on everything that I see. I mean, whether it's the DAX from Germany, or the FTSE from London, or the Dow Jones, the S&P, the Nasdaq, and the Nasdaq couldn't even make a 61% retracement today. That's how bearish that one looks. And so it's going to be very, very interesting from this level in here, and the fact that we have margin debt at an all-time record high, equaling what it was on a percentage basis from 1929, which was a high for a great deal for many, many years. Actually, the market went down from 1929, from September of 1929, September 3rd, into the low of July the 5th of 1932. There was about a 3-year bear market, and then from that, the market never looked back. We had some bear markets along the way, but it was bullish for, wow, how many years? 70, 80 years. That's a long-term bull market, I guess. So we'll see what happens. Okay, now the next chart that we're going to talk about here, we were talking about with John before we had our break, was the soybean chart. And as you can see, we've had that butterfly pattern form on in August, and then we had a very strong rally. Now the market's pulled back, and that has formed a head and shoulders pattern on the March soybeans, coming in around this $12.30 per bushel level. Now remember, now corn is down around $4.25 per bushel, and soybeans are at $12.40 per bushel. Now that is a very high price for soybeans. Traditionally, when we have corn around $4, we have beans around $6 or $7 or $8, but they're very, very strong this year, and the reason for that is demand has been so strong. And you folks use soybeans every day, whether you know it or not, because it's prevalent in just about many of the foods and also the paints and all the other stuff that we use for everything. Just as, I don't know if I've ever mentioned this on the show before, but Henry Ford was the one that was responsible for bringing the soybean to the United States, because he wanted to paint cars a color other than black, and the lacquer that they were using, they just couldn't get it in quantity enough in order to use the lacquer to add pigment to make cars a different color. Well, he knew that if he planted soybeans and got the soybean oil, he could add pigment to the soybean oil very easily, and hence we could paint our cars. And sure enough, guess what? They now have cars in all different kinds of colors, even cars that are not Ford. So it's going to be fun to watch, what happens to some of these crazy markets that we're looking at in the commodity markets, because they've been down for a very long time. Corn has been going down for well over a year. Wheat's held up relatively well. It's been in a little bit stronger trend than some of the others. So it's important that we remember, that not everything goes up forever, with the exception, of the stock market. Now, I wanted to switch over to the bond market here, because we've had a very big correction in bonds over the last, I think it's been it's been quite a while. It's been the last 10 trading days. We've came down to almost the 786 of the previous move, and we came very, very close to the spot on 382 from the major. So and the bonds have had virtually no movement today, given the fact that the other markets are so very, very volatile. I think the people are consumed with what's going on in the stock market. At least the trading people that I chat with, that's what they're watching. To me, folks, the key here is the Dow Jones Industrial Average. Right now, the Dow is only down almost 37, 38 points. If that Dow gets down more than 100, that's going to put added pressure onto the Nasdaq and to the S&P, which could get that S&P a little bit lower. 1743, of course, is the key point, and we are quite a ways away from that. We're more than 15 points away, but 15 points in the markets like we have now is really not very, very much. So that's something to sort of watch what's really happening. Now, I'm recommending to folks that are following some of the things I do, is I'm recommending buying March corn down in this area where we are now, because we've had such a really nice bottom form in that market. I'm going to put it up again into Tiger TV so that you can take a look at it. The risk here is only about a nickel, around $250, because it should hold the 430 level, and all you have to do is put a stop at 425, and you can become a farmer all by yourself. We got a caller from Las Vegas, Nevada. Has a very strange name, L-A-R-R. Oh, that's Larry. Larry, are you there?
I'm here. How are you doing, Larry?
Am I talking to myself or am I talking to you?
You are not. I would know that.
What can I do for you, my friend?
It's great to hear you again on the radio. I missed you.
Thank you.
I want to ask you about the three drives pattern.
Sure.
And it's measuring or estimating the length of the third leg. Now, most of the time you're going to get the first drive, the second drive, and they're not going to be equal in length. How do you estimate that third leg? Do you use the first leg or the second leg, or how?
No, you need, when you're doing a three-drive pattern, the key part of it is your A, B, C, D swing of your first leg down, and then you have the rally up, which the start of the second leg, the rally back from the second leg up to the high of where the first leg rally ended.
Right.
So it's the expansion coming down from that last move. In other words, that last top or that last bottom, you want to be looking for an expansion, either a 1.27 or a 1.618. You try to measure the time between the highs. And the only thing I can tell you for sure, Larry, is it's got to be really aesthetically pleasing to look at a three-drive pattern. If you have to ask yourself questions like, I don't know whether this is a three-drive pattern or not, I can assure you it's not a three-drive pattern. A three-drive pattern should just jump out like a rattlesnake in the desert. It just says, here I am, and you should be able to see it very easy because they're that symmetrical.
In time and
time and price. Most specifically price, but time too. The really good ones, they're very, very easy to see. I mean, they just line up so nicely. We've had so many of them recently, in these index futures that we talked about earlier today. We've had some we're having one in corn right now. So these are the ones that we're having a monster one in the stock market. It goes back on the weekly and monthly charts. So, and they're all very symmetrical, from high to high, high to high. The expansions have either been 1.27 or 1.618. So those are the factors that you really need. But make sure it's aesthetically pleasing to the eye. Okay. That's the real key.
Thank you. Larry, you mentioned Henry Ford. I gotta say this about Henry. I mean, what a great man he was, and thank goodness he was around. But he was also a big producer of hemp, and
was it for personal use?
Well, this is the other strain of hemp.
Yeah, I know.
Car parts. He made car parts. He was going to make a car, with parts made of hemp, and he was. Have you ever been to the Ford Museum in Dearborn?
Yes, many years ago I certainly did.
Is that amazing or what?
Yeah, he was really a special man. He worked so hard to do what he did, and to see what happened to his company through the years, it was really quite amazing.
If we ever had a meltdown of society, you could go to the Ford Museum and start all over. He has so many incredible machines in there. He has steam engines that are 2 stories high in there. I mean, if anybody has a chance to go there.
It's really spectacular to the work that he did. It was really, really amazing. I know he was a friend of Thomas Edison. I don't know if you knew that or not. And they shared a lot of ideas and stuff together. But Ford was... he was, I think, one of the original workaholics. He certainly put a lot of time and effort into his inventions and, of course, his business. Of course, his old saying was, "You can have any color you want as long as it's black." But frankly, that's what happened with the soybeans, is that they became the basis of the paint. And Sherwin-Williams and all these other companies, that's what they still use to this day, is soybean oil as the primary part of the paint.
Well, next to the Ford Museum is the Ford Village, and it's like walking back in time. And what he did is he bought Edison's lab, and he brought it over to Dearborn and reassembled it. But one stipulation that Edison said, he says, I don't want to give this to you, I don't want to sell this to you, because I don't want it to leave New Jersey soil. So what he did is he took car trains of New Jersey soil to Dearborn, laid it down, and he you can go see Edison's laboratory. It's just incredible.
Yeah, he's a pretty smart guy.
Oh, yeah, he did a few things, too. Well, thank you very much, Larry, and stay healthy and wealthy.
I will, and you stay away from the tables, okay?
No, that's not a problem.
Good. Well, it's good to go to the buffets and stuff, but it's best to stay away from the tables, no question about that.
Yeah, you'll fatten up at the buffets, and you'll get skinny at the tables.
Yeah, that's what the old adage is, I guess. Hey, thanks for calling in, my friend. I really appreciate your help and your comments.
I enjoyed it. Thank you.
Okay, thank you, Larry.
Bye.
Okay, we were talking with our friend from Las Vegas about Henry Ford, and if you ever do any reading about positive thinking or learning to be, successful in this business, Henry Ford was one of the people that Napoleon Hill worked with when he did Think and Grow Rich, along with Andrew Carnegie and a whole bunch of other people on the successful traits of businessmen and, what makes them, successful. So we always want to respect those things. And if those of you that ever want a book for positive thinking, it is one of the classics. It's the Bible of all time of self-help books, and it's Napoleon Hill, Think and Grow Rich. It was written in the 30s, and I don't know how many languages it's been written in or how many reproductions they are. I have it on video or audio tape for the car because I like to listen to it when I drive through. It reminds me, I happened to meet him when I was in college, and he and W. Clement Stone, and it was really one of my highlights of my educational career to meet those two gentlemen, and I've used their materials for a long time with great success. So the next thing I wanted to mention is the currency markets here, because we've had some really fantastic moves in the euro and things over the past few days. And today we had a 200-point drop after the ECB came in with their news that they were not going to change or that they were going to lower the interest rates, which means that the people in Europe are going to have to pay a little bit more. But the thing that we talked about and we featured in our newsletter, Profitable Patterns for Trading, was the euro last week, because it came in at that 138 level, which was the 61% retracement of the high that we made from 2011. I mean, folks, this made this within 10 pips of the exact price. It went 10 pips more. The number was 138.15. The market hit 138.25, and today's low was just at 133.25, I believe. And actually, we broke. No, that's true. We broke below 131. I didn't even realize that. Wow. No, we did not. Not 131. We broke below. 133. We did hit 132.95 on the downside. We're having a little bit of a bounce in this area that we have right now. So all of the currencies are very active and jumping around, and which is ideal for trading. And they're just the best things to trade are these foreign exchange things, folks, because they have so many swings that even during the day, whether you're looking at a 15-minute chart or whatever chart you happen to be looking at, it gives you a really good idea of where you stand. Now, I wanted to bring in to the next thing I wanted to talk. Oh, we got to take a little break here. Dow's down 35, S&P's down 5, and the NASDAQ down 28.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I posted in Tiger TV the chart of crude oil going back the last several days. We'd made a 61% retracement off of a smaller swing, and oil is starting to bounce a little bit. It's still down about 20 cents on the day, but it's held some pretty good support down at the 61% retracement. Now what I'd like to do to wind up the show here, I've been doing this show for a long time, folks. I think I'm going on about 6 years now, which is a long time for me. And I wanted to put a chart in here that I think is really important. I put it in here earlier, but this I've been looking at charts for a long time, folks, and this is the Dow Jones Industrial Monthly Chart. This has got to be one of the most negative-looking charts I've ever seen. If you go back and look at the bottom in 2009 in March and say, gee, I would have been really smart to buy that bottom, because that was a 61% retracement of the low from 1987 crash low. That was exact price with the Dow at 64.44. Now, if that's the case and you believe in patterns, we've just completed a major ABCD pattern on the monthly chart. We've completed an ABCD pattern on the daily chart. We've completed an ABCD pattern on the weekly chart, along with 3 drive patterns on the monthly and also on the weekly. So this is the place where you got to be very, very careful. And not only that, folks, that the New York Stock Exchange Index, which is the major stock index that people should look at, because that's the one that, has all the people, that has all the stocks in there that people look at, and there's 6,000 of them, and they happen to be all cap weighted, not just price weighted like the Dow Jones, and that's why you want to be so very, very careful in here to look at this, because we're doing the same thing now with this New York Stock Exchange index that we are with the S&P and the Dow and everything else. We just completed a beautiful 1.273 drive pattern, perfectly symmetrical from high to high, and high to high was spot on. And now we've taken out the lows of just several days ago, and if we go below the lows of last Friday, that's going to complete that weekly reversal. If we get that number in the E-mini the E-mini futures is 1743 in the E-mini December futures. That's a very important spot to look at. So just remember that the New York Stock Exchange Index, the broadest indicator of all the things that we look at, has not made a new high from 2007. It's making a double top. So you have to be incredibly careful in this area here, because I know I don't look at the fundamentals very much. I'm just looking at the technicals. But if the technicals tell us, this is what we're looking at, then you have to, really sort of respect that. So I know a lot of you folks are out there, in stocks. And just remember, if we go below 1743 in the S&P 500 or S&P E-mini futures, either today or tomorrow or even Monday, that's going to tell us that, we've had some type of a reversal of some major proportion, especially coming from these pattern completions. If it were not for the pattern completions, it wouldn't be that much. But with these patterns completing like this, that's the important thing to remember. If you go back and see what happened in 2007 when that occurred, you would have saved a great deal of heartache on the way down from 2007 to 2009 when we had the financial crisis of, too big to fail. So that's keep in mind, folks. I know it's a commodity hour, but this is the most important charts of the week, of the month, of the year, in my opinion. They're yelling at you and screaming, so just hopefully you pay attention. And if it goes up and makes new highs and keeps going up forever, that'll be wonderful too, and I'll be wrong, but we'll see what happens. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.